Good morning, everybody. I would like to thank all of you for joining us this morning on our session about smart insurance and how we can help you make bundling easy and provide proper protection for your client. Are we back? Can we hear me? Okay, let's just start again. I'm not sure when the sound went off, and I'm not sure why, but here we are. Thank you very much for letting me know. Again, we're going to talk about the concerning trends and the insufficient ownership of insurance in Canada. And I think it's really important for those of you that are new in the industry or have been in for a long time to really understand what the landscape looks like in Canada and what the opportunity is. Because never before in the history of Canada have we had fewer people that have individual life insurance. And this is of great concern, should be of great concern for all of us. So the first question I'd ask you is, are you sure your clients are properly covered? And I want you to think about that for a bit. Often we see that an advisor will go in and sell a life insurance policy, walk out of the home and say, hey, my job is done. The clients have life insurance and are protected because of death. But I'm not sure that's the proper coverage for your client because life insurance only fills one protection bucket. So let's look at what the landscape is today in Canada. 43% of Canadians own an individual life insurance policy. Only 13% own critical illness insurance. And I think it's important to note that 87% of Canadians have said they do not have enough money in the event of a critical illness. And only 11% own disability insurance. So almost 90% of Canadians don't have all three risk buckets covered. Now, I've been in the business for a long time and I've talked to advisors, and my passion for being in this business is to work with advisors to help you grow your business. And one of the questions that I often get asked is, Pamela, I don't have enough customers. I need more clients. 90% of Canadians don't have all three risk buckets covered. Do you think there's opportunity for you? Absolutely, and that's the great news story that I'm sharing with you this morning. So let's have an idea of what that looks like for the consumer. So if you look on this slide, you'll see that late generation Y, so those are persons aged 18 to 24. Almost 50% of them would have trouble immediately if a primary wage earner passed away. 34% could survive several months and 17% well into the future. And I'm not sure if that 17% is because they have lines of credit. If you look at the early Gen Ys, that's 25 to 32, almost 40% would have immediate trouble and 40% in several months. So that's really 80% of them would have a significant financial problem if someone died. And as we go on, we've got Generation X, 37%, the Boomers, 27%, and the early Boomers at 19%. But the bigger question is, how many of them want to dip into their savings in this event? So we have to think about what the consumer risk is and share that with our customers. LIMRA tells us that 6.1 million Canadian households know they're underinsured. so that they are absolutely aware that they need more life insurance. That's 6.1 million customers that need to talk to you. So let's look at what the workplace looks like in today's landscape, because it is significantly different today than it was 20, 25 years ago, even 10 years ago. The generation Y and X, so those were the 18 to 35-year-olds, make up 66% of the workforce. And almost 30%, age 15 to 24, are on temporary contracts with no benefits. So they have no access to life insurance benefits, disability, extended health and dental from their work. And only 50% of Canadians have an insurance plan at work. Those are significant changes that have occurred in the last 5 years, 10 years. And the other interesting fact is that only 6% stay in the same job. That's certainly a lot different for many of us when we look at our parents' job history, and many of them stayed in the same job for 30, 40 years. This creates a big problem for those Canadians who are job hopping. Next slide is talking about debt. They have an average of $330,000 to $440,000 in debt. The numbers on the right-hand side exclude mortgage debt. This is just consumer debt. So if you look at 46 to 55, 32,000 of consumer debt. That's outside of their mortgage. This debt needs to be protected, and these types of debts are at a high interest rate as well. So what does this mean? It means 9 persons out of 10 need their insurance reviewed to make sure all their risk buckets are covered. That also means that 9 out of 10 of your customers aren't adequately covered. You see, we know that the best client for you is the client that you already have. So here's an opportunity to go back to 90% of your customers to review their risk buckets and where you can provide them with opportunity to properly protect their family with insurance products, which in turn will generate income for you. 2 out of 3 Canadian households would be in trouble in several months or immediately if they lost the primary wage earner, either through death or illness or disability. Today's workforce can't rely on group insurance benefits when only 6% stay in the same job. And I think this is an issue that we're truly unaware of in our industry. We need to stay on top of this fact and look at things differently, because consumers are not staying in the same career, and they are changing their jobs. They're also consulting, so some of them don't even ever have access to group benefits. You have the ability to change this. And how do you do that? Well, with smart insurance. The insurance that goes with your client creates stability amidst uncertainty. So let's look at these 3 risk buckets. And there are many risk buckets outside of these 3 that your customer can face in terms of investment risk and so on. But we're going to focus on these 3 because they're easy for you to sell, they're easy for your customer to understand, and they're easy to get for your customer. So we have the life risk bucket, the disability risk bucket, and the critical illness risk bucket. And we can cover all of these in one application. You see, it used to be very difficult for an advisor to cover these buckets because oftentimes you'd have to go to one company for the life insurance, one company for the disability, and another company for the critical illness. And for you, that equals a lot of paperwork and a lot of pain for the customer. And typically the reason advisors have gone strictly on the life side in the past is because the client just doesn't want to go through the pain of the process, and neither does the advisor. Well, today's a new day. And here's what you need to, how you can explain this to your client. Does it make sense that the highest risk buckets have the highest amount of underinsured? So if you look on the left-hand side, you have 89% of individuals that do not have disability. And only 34%, they have a 34% chance of being disabled. That's a big gap. You have 87% that don't have critical illness, and 26% have a chance of having a critical illness. And that's the probability before age 65. And yet 57% have life insurance or have some sort, are underinsured. So 43% have life insurance, but they have a 6% chance of dying before age 65. Somehow, we focused on the 6% while leaving the 26 and 34% probability behind. I think this should be a concern for all of us. So let's look at the analogy, because you're probably sitting there going, oh, Pamela, easy to say, but harder in practice. And I want to challenge you on that thought, because we all have been part of bundling. How many of you have a smartphone? What if your smartphone could only call? I remember my first smartphone, and it was a Motorola Flip. It was one just past the Brick. I don't know if some of you might remember the Brick, which was the very large cell phone that Gordon Gekko used in Wall Street. But I got the next model, which was the Motorola Flip that you flipped open and you pulled the antenna. But all I could do is call. And at that time, that was pretty cool. I don't think there's anybody, at least on this call, or anybody in the millennials that would have a phone that just calls. Now people expect more from their phones, and they're willing to pay, because their phones aren't just phones. They're video machines, they're cameras, they give access to television program or TV and programming, music. They provide a whole lot of benefits to the customer, and they're willing to pay more. And in fact, they continually pay more because they want to have more benefit in that one little thing in their back pocket. So if we think the consumers aren't willing to bundle, think again. I would ask each of you, how many of you have your bundling with your cable? You have your cable and your telephone all bundled with one payment. We need to take advantage of these marketing strategies that have been highly successful in consumer sales and apply them to our own business model. The smartphone is not cheap. Consumers are not looking for the cheapest phone. They're looking for the most innovative phone that provides them with the most features and benefits. If you look at when iPhone comes out with their new iPhone 7, or when they came out with iPhone 6, people would literally line up, buy in advance so that they could have the latest and greatest. And it certainly was not the cheapest. A smartphone is a monthly expense, and it takes care of many needs: calling, texting, data, music, as I mentioned, live streaming, access to Facebook, posting things. It's just incredible what your smartphone can do. And in fact, I challenge all of you that we probably don't take advantage of all the features and benefits of our smartphone. But the first one I want to point out is that it's not cheap. And yet, the smartphone won't give them an income if they get sick. The smartphone won't give them an income if they get injured at work. And the smartphone won't give a widow a check in the event that their spouse dies. And yet somehow we see this as a more valuable asset than providing insurance protection. And the challenge is for all of us to give the client these analogies so that they can better understand how important it is to cover their risk buckets. So smart insurance is not cheap. It's a monthly expense, and it takes care of several needs: life, critical illness, and disability. So 5 reasons why bundling is smart and why consumers find bundling irresistible. How many people go to McDonald's and buy just a hamburger? Or they just buy a Coke? Not very many. So why is it that we have a client that's buying life insurance one time and never buying anything else? Bundling avoids this ambiguity. Bundling helps the client understand insurance. We know that bundling works. If you look at any product that's being sold today to consumers, whether you're buying a television, Best Buy will bundle in what? A warranty. Okay? McDonald's will bundle in fries and a Coke. Rogers will bundle in your home phone, your wireless phone, your cable, your everything. You go on a trip, you get bundled. You can buy in advance your meal on the plane. Because bundles let the consumer avoid thinking. They can't conceive of, okay, what is life insurance? What is CI? What is disability? That's your job. Your job is to bundle it and say, here are all the risks that you're facing, and here's how we're going to protect you against those risks. Bundles increase your perceived value. So if an advisor is bundling appropriately and correctly, it'll be very, very difficult for another advisor to come in with what we call the one and done sale. Bundles avoid hard feelings over nickel and diming. You know how you hate to go to, and they add and they add and they add, oh, if you want this, it's another $5. If you want this, it's another $3. When you present it to the client and say, we're going to protect you against this, this, and this, and the price is X, the consumer says, oh, that's great. Where do I sign? We have to get out of this mindset that the consumer is driving the sale. You are the advisor, and you need to equip yourself with properly presenting insurance in a bundled format so that the consumer is protected. And in fact, we'll talk about this in a few more minutes, but you will be protected also. Bundles offer the consumer a reduction in cost. Have you ever purchased car insurance, and if you buy car insurance and home insurance, you get a policy fee discount? Well, bundles offer the same thing in a bundled life CI and DI. And Assumption Life, we have the bundle. So here's a slide. We have a joint term life of 50K to 4 million. And here are your options: T10, T15, T20, T25, T30, and T35. Now I want to ask all of you the question, how many of you lead in with your sale with a T10? How many of you believe that's the right thing to do for the client? Sometimes T10 is the right thing if you have a business owner and they want to cover a risk for a period of time. But if your customer has a mortgage, how many of your customers have a 10-year mortgage? What's the cost of insurance for that client if you were to sell them a T10 and they were, for a health reason, unable to renew that or reapply for that coverage in year 9 or year 10? Is your customer paying more for insurance or less? Are you actually doing your job and providing the client for the protection that matches the risk? And then there's disability insurance. One thing we know is that the financial institutions have done an excellent job in selling mortgage insurance, including DI. It is the most common bundle that the banks provide on a mortgage product. And they've done it very well. It's another evidence that bundling works. The problem with that, of course, and we all know it, is that when is the claim adjudicated or underwritten at the time of claim? So if you are a life insurance advisor, an investment advisor, and you're only selling life insurance, you're doing your client a great disservice, and it becomes very difficult to replace that mortgage coverage when the bank has sold the client coverage in the event that they're not able to work to pay off their mortgage. So with our Smart Insurance plan, you have disability insurance coverage that can range from $300 to $3,000. And you can choose to base it on the loan. And if you base it on the loan, it's not integrated with any disability benefit that they would have personally or through work. And if your client doesn't have any disability, they can choose disability based on income. Then we add to our bundle critical illness. And the client can choose anywhere from $10,000 of coverage to $25,000 of coverage, providing CI coverage on 16 conditions. And what do you think the most common conditions that are claimed on critical illness? Well, in British Columbia, 87% of all CI claims are cancer. But the top 3 are cancer, stroke, and heart attack. And that covers well over 90% of any critical illness claim. How many of your customers, if you ask them, could you use $25,000 of cash in the event you got critically ill? Or what would it look like if you got critically ill? Would you like to have some money to help you recover? How many of your clients would say no? And what about the family? Today, more than ever, parents are spending more money on their children. We call them helicopter parents, and I happen to be guilty of it. I still have one at home, and I hemorrhage over expensive jeans and sporting activities and technology because, of course, today's child wants to have the best technology. And yet that money is just flying out the door, providing no financial protection to my child. So if you add on child insurance protection benefit, what does that do for your client or your child? Well, first of all, it provides them with guaranteed insurability. Unfortunately, as parents, we cannot protect our child from poor lifestyle choices or protect them from any future health issues that they have. And juvenile diabetes is the #1 illness being diagnosed for children today. When you purchase a child insurance benefit rider, you're protecting your client's child's insurability. And the problem that we have as advisors is that we don't talk about it. We don't help our customer understand what that really means. A child insurance benefit rider is a really affordable way to guarantee the child's future insurability. So what does a smart insurance policy look like? Well, a smart insurance plan has life, CI, DI, and critical illness, and child riders. Now, if your client has a difficult time in purchasing a T25 or a T30 or T35, we have the solution for them. They can buy a T10 and choose a switching option. This switching option allows them between year 2 and 5 to go from a T10 to a T20 or T25. Perhaps that's when they have a raise in their income, or they're able to reallocate their funds. You give them a year, 2 years to get their financial house in order, and you have an opportunity to go back to your client and provide them with the right coverage over the period of time. The other wonderful thing about the life insurance is that it's renewable and it's convertible to a permanent product. This is really important also because permanent products provide the client protection forever. It's the difference between renting and owning. So these products allow for that as well. So let's get some further information on the disability income rider. I noticed that there's been some questions down there. And we have 2 great options. You can choose to have your loan payment replacement, and that would cover your mortgage loan or a line of credit. And it also provides some coverage on personal loans. It does not cover for a car loan or to pay off credit card debt, but loans such as boats, our recreational vehicles, or an additional cottage or recreational home. So they can include those loans in their disability loan payment. And I can't stress enough that if the client chooses the loan payment option, that it is not integrated with other benefits. So if your client has maxed on their DI benefits either on an individual policy or through work, this is an additional disability benefit that they can get. If they choose income replacement, it's 75% of employment income. So it doesn't include earned income. And that is also a great feature. I would also like to mention on our DI, which is really important, is that up to $1,500 of benefit, we do not underwrite occupation. So if you have a client that is in forestry or perhaps has just become a massage therapist or is a taxi driver, they can get up to $1,500 of disability without occupational underwriting. This is great news. And the disability benefit does not need to match the mortgage payment. So if the client's mortgage payment is $700 and they are a taxi driver, so they're a substandard risk, they can get up to $1,500. Many other plans require that the client choose the loan repayment to equal the loan, and we do not have that requirement. The critical illness rider provides 16 conditions, and the premiums are extremely affordable. And I think what's really neat about this product is that there are no additional questions. In my experience, oftentimes advisors avoid selling critical illness at the time of life because they're concerned that what if something comes up in the CI question and then negates the life sale? And that is a valid concern. I have seen that happen firsthand when An advisor submits a life application to a company and then a separate CI. We understood this and took this into consideration when we developed our CI rider. And we believe that as our limit on this particular product is $25,000, we can allow that client to answer the same 15 questions for life and CI and issue them up to $25,000. The terms are 15, 20, and 25. And 16 conditions cover well over 95% of any CI claim that your client would have. This is a really unique opportunity for you and one that's highly overlooked. And I think it's important to understand that many policies out there, particularly their family history question, can provide a decline or a exclusion on CI where we would not. Is my voice gone? I see a little sign. Can you hear me? Okay, there's Tom. Hi, Tom. How are you? Great to see that you're on the line. And I just want to mention, I see a lot of very familiar names, and it's great to see you there. So let's talk about the Child Insurance Benefit Rider. For those who want to have multiple children, there is no limit. So once you purchase this, you can have unlimited children, and the coverage is $10,000 or $20,000, and it's convertible for each insured child. I do want to take a moment because children's insurance is really important. We've seen so many changes in the life insurance industry and in products in the last 2 years. We've seen more changes in the last 5 years than I've seen in the 25 years preceding. And those of you who've been in the business for a long time can certainly attest to that. And one thing that we have seen is that getting permanent products is going to become increasingly more difficult. Many countries don't have guaranteed premiums any longer in the permanent realm of insurance. And so in Canada, we're very, very fortunate to have level premiums, to have paid up policies. And what an amazing way to provide a legacy for your child. And with the affordability of insurance premiums for children today, it is such a wise choice for you to present this opportunity to your clients. And children's insurance is not sold based on thinking about a child's death. No one wants to think about that. And in fact, I don't even suggest to put that in part of your sales process or sales script with your client. It comes down to providing a foundation, a financial foundation for your child's future. To buy them insurance coverage today when it may not be affordable or available to them tomorrow. And that is a real key point. We spend, as I said, we spend so much time, money and time with our children. Telling our clients to reallocate some dollars to protect what matters most is a really important strategy. And if you take the time to go through your client's financial output as it relates to their child, you know, what are you paying in soccer, and what are you paying in entertainment, and what are you paying in your child's cell phone bill? You see, they've got these bundled costs around their children. Would it make sense to just take $30 a month out of that bucket and put it in a different bucket to protect your child? A child insurance benefit rider is a really inexpensive way to get coverage, but there are also individual permanent products that are available to children as well. We have a participating policy. All 3 of my children have it. When you're looking for new sales opportunities, this is a real significant opportunity for you to grow your business without having to go get one more client. If you look at your client base and review how many of them have children or grandchildren, what a wonderful opportunity for you to go back to them and say, hey, I know your child is so important to you. Would you like to talk about laying a financial foundation for them for the future? What a great lead-in to talk to your client about this. When you're going into doing the smart bundling, adding the child insurance benefit rider is like adding fries. It's like adding to the bundle. And quite frankly, how many clients would say, oh, I don't want to cover my child? I don't want to protect their guaranteed insurability? It's just how you frame the question. It's how you frame the opportunity for the client. So let's look at a few smart insurance scenarios. We have Michael and Jessica, 35 and 30-year-old. One's a developer and one's a story producer. The problem is that they've got a lot of money going out the door. They've got their mortgage, their lease payment on their cars, they've got their travel fund, they've got, I mean, we all know what they're paying out every single month. So let's look at our solution. They buy a flex term policy for 30-year term, face amount $585,000 with CI coverage, disability income, and they're paying $13.29 per month for Michael. And for Jessica, she's got a little bit more life insurance face amount. Perhaps she's the primary income earner, and additional critical illness coverage because if something happened to Jessica, they probably could use more cash to do the things that Jessica would do, that mom does in the house, that dad doesn't necessarily do, and disability income of $2,400. So it's clear that Jessica is the primary breadwinner here in celebration of National Women's Day yesterday. So the total amount of premium is $2,600 a year. And that provides them with coverage for 30 years and 35 years for Jessica. That's almost it's like a $100, $105 a month sale, $110 a month sale. Those of you who went to, did career training, we were looking at the $20 a month sale, and now we're the $100 a month sale. What do you think Michael and Jessica's smartphone bill is and their cable bill? The outcome for them is that they have a policy, they have their mortgage covered in terms of their disability payment, they have critical illness coverage, and they have significant life insurance protection for a long period of time. I just want to remind you of that. That's a 30 and 35-year term. I would challenge you to look at what if Jessica and Michael bought a T10 and then they paid their renewal rates at year 10, and then at year 20, and then at year 30. Their price for coverage would be significantly higher than the $2,600 we see on that screen. Clients are looking for advice and simplicity. Many of you know my menu analogy, and I travel a fair bit, and my daughter's favorite place to go is the Cheesecake Factory. And when you go to the Cheesecake Factory, you've got a 30-page menu. And you can't make sense of it, and you're scared of it because it says the calories beside everything that you're going to order. So the server comes up to you, and what do you ask the server? You ask them, what's the special, or what do you recommend? See, advisors are confusing clients by saying, I've got 27 different carriers available, and I can get you whatever you want. The problem is the client doesn't know what they want. I don't have the camera on because I've got a ball on right now. So how do you get smart? How does this work for you? How does it make your life easier as the advisor? Well, first of all, it's one application. You don't need an application for life, and an application for DI, and an application for critical illness. Bundling works. It's a proven strategy. And if it works for Rogers and Bell and TELUS and McDonald's and Best Buy, it will work for you because consumer behavior is nothing but predictable. Okay? It's easy to add critical illness, and it's easy to add disability. You have the same questions, the same 15 questions for life and CI, and we have 3 more for disability. And the 3 for disability are really simple. Have you been working for 20 hours or more per week? Are you currently on disability? And have you been away from work for 30 consecutive days due to sickness or injury? Those are the 3 only questions for DI. The other great thing is that you can sell this in person or non-face-to-face. For those of you in BC, we've had more snow this year than I can remember, and it's been very difficult to get around. But you still need to make a living. So isn't that great that you can call your clients and sell them these products over the phone? And next time we have a snowstorm, I suggest you take advantage of it because your client will be home, which will be a great opportunity. We have an electronic application which includes an e-signature, so it is truly a paperless environment. And if you're marketing to the millennials, they will certainly appreciate this. They would not appreciate a process that's electronic and then stops and becomes paper. They are so well versed in utilizing technology that their expectation of you is to do the same. And very important to you as advisors, because you have to put food on your table and you're in this business to earn an income, is that we're quick to issue and quick to pay. Those of you who have experience with Assumption know this to be true. And I just want to put it into reality for you, and that's not just on our simplified issue products. Every quarter, one of the largest MGAs does a survey of their own business to determine what carrier, both underwritten and in simplified issue, is the fastest to underwrite, and Assumption Life has been #1 for as long as I can remember. And what does that do for you? Well, that pays you more quickly, but most importantly, it provides your client coverage, and you are meeting consumer expectations. So what are the benefits? One application, no paper, very easy to understand, very easy to sell. We're a mutual company, you get paid quickly, and we really appreciate your business. And it's so important to us at Assumption Life that we give you stellar service. We may not be perfect all the time, but I can certainly promise you that if we make a mistake, we'll make it right. And I think what also makes us a unique value proposition is your direct access to our underwriters. I've been in the business for over 30 years, and I have never seen a more committed underwriting team. They are responsive, they care, and they look at your client from a holistic perspective. They don't just look at your client and go to a manual rate and say yes or no. They do their very best and go to reinsurers for any face amount to ensure that your client gets the best rate given their health situation. We have an A- excellent rating with AM Best, solvability ratio of almost 240%, and assets under management of $6 billion. And of course, we have Leah, our electronic sales tool. And please don't be afraid of electronic applications. We have a team here waiting to help you get well versed in electronic applications. And it's really important that you do this because the world is changing, and there will be a time that electronic applications are the only way you're going to be able to sell insurance to your client. So why not jump on that train now rather than have the train leave the track without. You can do our Leah online or offline. So if you don't have access to the internet, you can do everything offline and then upload it later. And again, non-face-to-face sales. Another really important thing is, how can you have face-to-face sales with having to have a delivery receipt? Well, we don't require a delivery receipt, making the process even easier for you. So at Assumption Life, we have what you need. One simple and comprehensive insurance plan that covers all 3 risk buckets. It's bundled for you, and it's bundled for your client. The pricing is like a smartphone plan, and it provides debt protection, income replacement, and if your client job hops and they lose their benefits, and sometimes they have them and sometimes they don't, this particular plan will go with them wherever they go. So we have a promotion that we just launched on March the 1st that will help you provide benefit to your client, and you also benefit as well. The promotion will have your client receiving a Visa card that will replace the first year's policy fee. So the first year policy fee for your customer is on us. For all policies sold between March 1st and April 14th, your client will receive a Visa card that will equal to or greater than their policy fee. For you, what's the benefit for you? You receive double credits for every flex term sale that goes towards your conference qualification. Our conference next year is in Barbados, and we have very simple qualification criteria. For you and a guest to go to Barbados, you need to submit 80,000 of production. So that's 80,000 premium, not FYC. Again, it's 80,000 premium FYC. So let's put that into perspective. If you remember the last example that I showed you of Mike and Jessica, where their premium was $2,600 a year, that $2,600 would equal 2,600 production credits. So at 10 sales of 2,600, that's 26,000 of premium. You're more than a quarter of a way to Barbados. But if you sell those products between March 1st and April 14th, that 2,600 sale becomes what? 5,200. And if you were to do 10 sales at that, that's 52,000 of credits. You are more than half your way to Barbados. So I want to encourage you on that. And if you're in the investment business as well, one production credit is equal to $35 of deposit. So we really make it easy. We still have our conference. It is in Barbados at the Sandals, and I want to tell you that they've just renovated the entire resort. So we're very, very excited to have many of you come and join us at that conference. For more information on our products, you can visit our Producer's Corner. This is our broker portal that provides you with all the information you need on our products, as well as the ability to download LIA. If you don't have LIA, you can download it by using Demo Agent, all one word, all lowercase, as your login and your password. And then you can have LIA on your desktop. And if you see products that interest you, you can get contracted through your MGA and simply go into LIA, and you don't need to download it again. You put your username in and update your profile. Today's presentation, if you have a contract with us, you can log into Producer's Corner and you can see the presentation slide by slide and also have access to our other presentations as well. So I want you to think about this for a moment. Think about your client list. Think about your customers. And ask yourself the following questions. How many of my customers have mortgage insurance with the bank? How many of you wish you had more clients? Well, if you look at that customer base that you have, and let's just say 10% of them have mortgage insurance with the financial institution and not with you, that's a 10% of your client opportunity right there. You go, well, Pamela, what do I do? How do I reach out to them? Well, it's very, very simple. Simply pick up the phone and ask the simple question. Would you like to save money on your mortgage insurance? Or would you like to have a guaranteed product to cover your mortgage? One that has a promise to pay. Another great question is, would you like to have the new mortgage insurance? And then the client creates an open dialogue with you and says, well, tell me about it. And here's your opportunity. I can guarantee you a couple of things. The only thing that the mortgage insurance for the bank is promising to do for your client is to take their money. The premiums will go up every 5 years. And the client at age 69 will no longer have any coverage at all. We all have a license to sell life insurance, and we hold ourselves up as professionals. If 10% of your clients have mortgage insurance with a bank, 10% of your clients are at risk. So why not do something about it? All of your team here at Assumption are committed to helping you mine that data, to help you with tools to reach those customers. And the bundling opportunity is just a really easy way for you to go to your customer in a way that they understand and provide them with the opportunity to protect their families and also provide you an opportunity to make more income. I want to take this opportunity to thank you for joining us this morning. I have a little survey I'm just going to open up, and I would ask each of you to complete this survey so that we get a clearer picture as to how we can better serve you, and if you find that these webinars are of value to you. So I have this up here. Hopefully you can see it. Can everyone see that? Has everyone received it? So the first poll is, what is the one thing you've learned today as a result of today's webinar? If you can provide us with an answer for that. The next one is, would you like to schedule a meeting with your Assumption Life wholesaler? I'm very proud of our team. We have an awesome wholesaling team who are very committed to your success. And they are a friendly bunch and a very knowledgeable bunch, and would love to reach out and meet with you either in person or via webinar and help you learn more about our products and services. And then the last question is, do you see an opportunity to grow your business with Assumption Life? I want to finally mention, because I had promised to speak to this, One of the things that you need to be aware of today is that we're in a more litigious community in Canada than we ever have before. And compliance is a big issue for all of us. And I want to have you think about, what if you only sold life insurance to your client and didn't offer critical illness, and your client was diagnosed with cancer and came back to you and said, why didn't you sell me that product? Smart bundling allows you to provide that coverage to your client and to protect you from a compliance perspective. And the same is true for disability. I was recently on Ontario meeting with an MGA, and they indicated to me that they had an advisor that was being sued for not selling critical illness insurance. I don't want to scare you or alarm you or create fear, but it is a reality. At Assumption Life, we want to help you avoid that and be as compliant as you possibly can while doing the right thing for your client. So really take this into consideration. Perhaps you have a meeting today or a meeting tomorrow with a client. Take a step back and say, how am I going to present a bundle to my customer to protect them better and to also grow my business? I want to thank each and every one of you for your business and for joining me here this morning. We value each and every one of you. We would like to get to know you better, and we would also like the opportunity to earn your business. So again, I'd like to thank you. I'll leave this survey open because we'd like to hear from as many of you as possible so that we can better serve you. And I'll leave also this open for a few more minutes to answer some questions that you may have. And I also just want to mention that we're in a great business. You know, many of us, I'm an insurance advisor. No, we give people money when they need it the most. And what we do is really important work. There isn't many opportunities for careers where you can look at it and say, I make a difference in someone's life. When you hand that check over to the widow, or when your client has cancer and you can provide them with a check for $25,000, you've just made a significant difference in that family. And so let's take pride in what we do. And again, if you have any questions or if you'd like to learn more about Assumption Life, please feel free to reach out. I'd like to thank each and every one of you again. And it's almost the weekend, so have a wonderful weekend, and we look forward to hearing from each of you. Thank you very much.